Hi guys, this is Simon with Trade and Perform Coaching, doing the trade review for ES for Wednesday the 21st. And so just going over really quick how the day went. So number one, coming into the day, if you'll look below, if this video ever gets edited on YouTube, I had to pull out a little bit of the front of it and take out, I did some live trading for my coaching clients, and so I had to pull out the back end, and the edits take forever and a year to get done in YouTube. So hopefully they'll be done soon, and that video will be ready to go. The point being that this morning, my first concern that I pointed out was, number one, it's a Fed day. Okay, so again, I'm going to keep coming right back to the same idea. I like to trade on my high odds days, and I like to sidestep my low odds days. And when you have two Fed speakers, one of which is Janet Yellen speaking, and you have the Fed minutes being released on a particular day, that usually doesn't work out so good for me, right? I don't have high odds trades. Now, as it was, that there's some trades that actually worked out okay back to the downside. But there's two ways that people can present trading out there, okay? You can present, hey, I'm a genius, and I can trade every kind of market in every kind of environment, right? And that's what they're selling, because they're trying to get people to pay for that environment. Now, everyone's selling something. I am too. I'm not going to say that I do charge for the service, right? And so what I'm selling is sustainability, right? I'm selling the fact that I think you can get consistent, high returns in your trading. You can control your downside quite effectively, and if you'll sidestep the hardest days, your P&L will have a tendency to grow quite effectively. And one of the things I want to show you, just getting started in this particular issue, something I worked all night on. It's been a long time since I've maintained, at least for public purposes, the spreadsheets. And so let me see if I can pull this up really quick. And if I can, I'll see if I have it here. Here we go. So this is the spreadsheet I just got finished for this month. I don't have the back end dates completed just yet, but I will. But this basically goes back to the first of the month, right? And I basically put in either where my entries were and what the zones were. I need to clean up the back end of this because I don't have the exact entries. What I had done here was I did have the entries and the targets. I just haven't had time to finish it out, and it's late now, but I'm almost complete. And as you can see, as we got to the more recent dates, I actually had the zones, and I will get the exact entry placed in the trade. As a matter of fact, I have no idea why I left this out now. I'm going to have to go back and fix it one more time. But the point being, I don't know how I missed this. This is when you trust a dyslexic to do a spreadsheet. But at any rate, I didn't get these top entries. I'll have these filled in by tomorrow afternoon before I publish this. But what you can see is that, okay, there's multiple ways to measure a spreadsheet. So what this simply reflects was the ability to get into the trade at a particular location that I either set up in the meeting prior to the open, or I actually went onto StockTwits or Twitter and posted, hey, at this price, I will get long, right? And then I entered that I am long, I will exit at this point. Okay, and so that's what this spreadsheet represents for the month. Again, the idea is to get 1 to 2 trades a day. If you get more, that's great. But 1 to 2 trades a day, and then I'm listing these in two ways. The way I measure it is that I simply assume that I exited the entire trade at 2 points. Most of these trades had much more than 2 points to offer. Most of them were anywhere from 3 points all the way up to 9 points potential per trade, right? There was obviously some losers in there, but if you look at the end of the month, right, it's been plodding along nicely and slowly. The majority of trades, as by design, are winners, and you can see by the time we ended the day yesterday, we were plus 17. Okay, so what I want to show, just like when I originally started the blog, before I had some significant family issues, what I wanted to show was that slow and steady, taking the first moves into the zone and focusing, and I have multiple strategies, but only focusing on that strategy has actually delivered a pretty good month, right? It's the 17th. I believe we still have a good, we have a good 4 days left, right? We're going to be closed Monday, but I could certainly add anywhere from another 4 to 8 points. Not a ginormous month, but certainly a good month, right? I can certainly get above 20. 20 ES points is $1,000 per contract, right? If you're trading even just 2 or 3 contracts, that's $2,000 or $3,000. So what I'm trying to show is that there's a value added, and there was certainly the potential. I'm certainly not necessarily the best trader in the world, even of my own zones, and there's certainly the potential to grab more than that. And this doesn't even begin to cover the trap trades that that I go through in my room and in my individual coaching sessions, right? And it doesn't cover any of the NQ trades that I take. It's simply focused on the ES. Why the ES? Because it's the easiest strategy I have to explain in a small format, meaning I have 123, I guess, characters to explain the strategy, and I can stay very, very consistent with it. And it's pretty straightforward, right? And as you can see, it tends to be very consistent. And this month has actually, frankly, kind of sucked. April was a really huge month. This month has really kind of plodded along. But it has been, like I said, consistent. And the focus has been between 8:30 and 10:30. As a matter of fact, on all of this, I think there's only 2 trades that took place in the afternoon. And they were the 2 trades from yesterday, actually. These 2 trades were the afternoon. Everything else on here are trades that took place prior to 11 a.m. Central Time. So moving on, it's late, and I need to get a little bit of shut-eye, but I wanted to catch up on this. I was a little frustrated not being able to succinctly explain how the strategy's been working to other people out there, and I will get these specific entries filled in. So I don't know how I missed this, but I just must be tired. Anyways, moving on, going back to today. So if we look at today, and you'll see my first concern, what's my first concern every single day? When we have a gap, right, which is what this was, do we get an attempt at half gap or a gap fill? If we don't get that right out of the gate, right, what do I know? I know that I have strength. Ease back on trying to jump in to the short side of the trade, right? Number one, it was open drive higher. I knew I had a Fed speaker at the top of the hour. I had absolutely no incentive to go in on ES and take a short to the short side. Numero uno, number one. Okay. Secondly, look at the lack of rotation in all of this. If you go to a 1-minute chart, there was like almost no rotation down. We almost parked here, as a matter of fact. I mean, I'm telling you, it was 2 or 3 ticks. I didn't even consider taking a trade in ES there. Now, we had 2 targets in the day. I had said that this would be the first location, right? What I would rather trade off of here is to attempt to get a trap trade where we closed back below, as we did here, where we closed back below the prior day's high, and see if we could have a move to the downside. Again, I was focusing, I did this in real time, and I focused on the NQ trade, which paid actually quite nicely 2 times, right? And then we trapped again. Later in the morning. Now this trap, if you took this trap, actually stopped. I'm not going to go into that. But the bottom line was, with regards to the zones, I did not want to take a trade here this morning for one reason and one reason only. There was no rotation, gap up, no attempt at half gap. You've got to stand aside and at least give it some time to develop. And we knew at the top of the hour, 9 a.m., that we were having a Fed speaker. I also went in and said that I would look for a potential rejection here, but this is not where I wanted to step into the downside, and that where I would want to step into the downside was this 1885.25. Unfortunately, that came right when the Fed was released. I don't trade Fed releases. Simply not worth my time. But if you look, the concept was right at least. We came off of right of 1885.50. Open gaps are great places to look for potential reversals. When they're stacked on top of each other, it gets a little more complex. But as you can see, I said all day I thought this 1885.25 would be significant, and it has held. It held very nicely today. So it was a great trade location. Again, I don't think I need to be very involved in Fed days because I know the following day will usually be fantastic. So I want to leave one more piece here. Volatility is actually screeching to an all-time low, right? If we look at the volume profile really quick. And we switch over. Okay. This is just getting compacted. Look at where we've come from, right? Look at where we've come from to what we've come to. This is This is pitiful, folks, quite frankly. This is just tight, tight, tight stuff, okay? And it is driving people nuts. People are getting bearish. People are getting bullish. So let me clear up the bullish and bearish picture really easily, okay? I'm going to do that right now for everybody so everyone can relax a little bit. Take this. We need to close above 1894 to get bullish. First, we need to close below 1855 to get bearish, followed by this area right here, 1809, and then there's a small area right here at this 1840. Those are the key areas. Unless we get below, and I'm not making predictions, okay? Unless we get below this, we're not bearish, okay? This is the step one. Step two, get below this. Step three, get below this, okay? Will not get easy until that happens. On the upside, we are not bullish until we close above this, okay? And everything in between here, look, this is 1894 to 1855. I'm happy staying in the 30-point range, 40-point range. We can make plenty of money there. But we got to get above here, or we got to get below here, or it's just all BS. It's just going to be a balanced market back and forth. When we get stretched to the downside, there'll be responsive buyers. When we get stretched to the upside, there should be responsive sellers. And we should make plenty of money in that environment, even if we're just grinding it out, okay? Who's getting killed? People that are getting killed are saying, hey, we're short. We're going down here, right? They're getting bearish. They're getting bearish down here, and they're getting crushed. They're getting bullish up here, and they're getting crushed. Who's thriving in this? Well, hopefully it's guys like me who are saying, I'm just an opportunist. If you give me an opportunity, you give me a trap trade, you give me a good rotation into a zone, and I'll take my 2 points, I'll be happy to do that. Because you know what? When you look at this spreadsheet, I don't care what anybody is saying out there, nobody's making money in this who's a position holder. Okay? Absolutely no one. And as a matter of fact, what happens is you get cracks in individual stocks for individual stock traders, and they get bone crushed in these particular kinds of environments. We've been in an environment like this before, by the way. So just so I go through, because I'll cover this and then I'm going to wrap it up. I'm tired. Let's do that really quick. Okay. Okay. While this is getting exceptionally narrow, you can see we went through a period of time in mid-March where we consolidated and exploded. Here, let me show this so that everyone can see this, okay? Here, got really tight for 2 weeks, explosion. Got really tight for a couple weeks, explosion. We've gotten tight, movement, tight. Now we've just lost the movement. Now we've just gotten really tight, right? So one way or the other. When will that happen? I don't even care, okay? I know to expect that we'll have an expansion out of the range. I know that'll usually be accompanied by a gap up or a gap down, right? And I'll be cautious that the open drive's higher and the open drive's lower that we've been experiencing in the first hour. But generally speaking, the market has been responsive because particularly early on, because the ranges have been getting narrower and narrower. So what do I want to be on guard for? I want to be on guard for an expansion of the range. Why? Why could that cause me problems? Because in the first half hour, the first touch of zones have been golden, right? Because the ranges have been contracting, right? Globex highs, Globex lows have been providing pretty good trade location for reversals. If the range expands suddenly, okay, those areas are going to get run over. And if you don't adjust quickly, losses will rack up. So you need to be mentally aware and be prepared to make a quick shift if we see the range expand. On the other hand, right, if we don't see it expand, we know 10, 15-point range extensions either way are probably going to get responsive sellers, and you'll probably be able to make money at that location. So trading is all about changing the pace and the rhythm. That's how the market throws you off, but the mechanics are the same. Anyways, my name is Simon. I'm with Trade and Perform Coaching. I really hope this is helping some traders out there. I know that it's been very rewarding to see the guys I'm working with go from losing money to getting consistent and making money. There's lots of ways to make money in the market without having to chase this thing. You can let the market come to you and set you up to be a consistent winner. That's what I want to show with the spreadsheet. I'm going to post that incomplete spreadsheet on my blog, and in terms of the number of points that I've made, I'll complete. I will finish filling it out correctly with the correct entry points, actual entries, hopefully by the end of the day tomorrow. So anyways, I'm someone who I go with the idea of put it out there. Obviously, if anyone wants to check my work, you cannot erase your entries on StockTwits. Once it's there, it's locked. So you can cross-check what I said. Also, I post most of the market previews on the website, so you can go back and look, hey, did he really set this up or not? It's there. This is legit. You can make a lot of money trading in the futures market if you approach it as a professional and you commit yourself to the process, your process of trading, right, as opposed to letting the market dictate what you're going to do or feeling like you have to chase one way or the other, and it'll change your world as far as being a trader goes. Anyways, you can reach me at tradingperform@gmail.com. I'm going to upload this, post it to the blog, and go to bed. Have a great night, guys. We'll talk to you tomorrow.